Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video we are looking at Novo. Novo is one of the companies that you guys have asked me so many times, so we will go over today and see if this company is actually a good investment. We'll look at the fundamentals, we'll look at the company product and so on. But before we do that, can you do me a favor and just press that like button? If you have not subscribed to the channel, please do so as well, because it really helps the channel. And of course, as always, I've also said to you guys, it's very helpful if you guys can join us on the Patreon account, which gives you access to the Discord, which gives you the access to the Sharia compliant investing ebook, the daily buys and sells of the Watchlist and things like that, and of course all the ETF and stock trackers, inshallah. The company we're talking about today is this one here, is Novo. This company is Danish. Okay, they are based in Denmark, and as you can see here, they operate through basically diabetes and obesity care. That's their main product, and they've been in the news for recently a lot with Eli Lilly, and the reason is because they've developed this product that they for the diabetes, but then they find out people were actually losing weight using that same product, and then for that reason they started running out, because everybody that wants to lose weight is decided to use it. Now in Belgium recently, they actually decided to halt it because of they started only giving it to people who have diabetes rather than people who want to use it for a weight loss purposes. So, and because of there was a bit of a shortage. So the company is doing really well in terms of that, because the product of course is doing really well, and that really helped the stock. The stock is up right now almost to 42% a year to date. Okay, and for the 1 year it's up 82%. For the last 6 months, okay, about 16%. For this month about 8%. In just last 5 days about 3%. So it is in the green all the way. So right now it has a forward PE of about 38 right now. So it seems a bit expensive. So what we now need to do is look at the financials, see if they what their margins look like and so on. And that for that one, we're going to go on here. As you can see, it's not a small company. So $429 billion market cap. It has an EPS of $2.10. Now in terms of economic mode, it has a wide economic mode, and it has a beta that's quite low. Now PE 46, and the forward PE is right now 38, like we've already seen. The sector is about 27, and the S&P 500 is about 24. So in the 5-year average, when you look at the 5-year average, let's even round it up this to 30. And when you look at it right now, 46, it's seems very expensive. And when you look at the price to free cash flow, it also seems very expensive. So I would say based on the current PE and the historic PE and the forward PE, this seems a very expensive company right now. And the fact that we've already seen a year basically to date is up to 42%, that tells me it might be expensive. But let's have a look at the rest of the financials. In terms of the dividend, they pay $1.26 dividend yield. Payout ratio is 48%, which is quite very healthy. Latest increase for that dividends was actually 19%, and the 5-year growth rate is 10%. Now they have increased that dividend according to Simply Safe Dividend for 26 years in a row, and their annual payout is about $1. Safety is 99%, and free cash flow right now about $9.5 billion of free cash flow. Now free cash flow yield of 2.3 and free cash flow margin of 34%. Normally we're looking about just anything above 3%, anything above 5%. So this one is really good, but this one just about missed out. In terms of profit margin, this is where this company shines. Profit margin of almost 34%, operating margin is 42%, return on invested capital of 80%, and total return in the last 10 years, including dividends and so on, is about 20%. Return on invested capital, okay, we're looking about almost 60%. And in the last 5 years, in terms of revenue growth, is about 11%. Compounded annual growth rate of 11%. Current ratio, we're looking at just below 1. So that means the company right now might not have enough cash Okay, basically enough liquid assets to actually liquidate if they need to, but they do have some free cash, which is quite good. Now, in terms of growth side of it, this surprised me. Okay, so this year they're expecting the earnings to grow about 19%. But then after that, it's about 3%. So I'm assuming all the obesity side of things, all the weight loss will we will see that next year, 2024, basically they will make a lot of profit from there. And then after that, it becomes flat, because there are other companies like Eli Lilly who's also sells the similar sort of a product when it comes to the weight loss. So maybe that's to basically they share that market. Maybe for that reason, it's about 3% growth for the next 5 years. But whatever the reason is, according to Yahoo Finance analysts, they think that basically next year is supposed to grow about 19%. After that, just about 3%. Okay, just below 3%. Current rate price, we're looking about $97 right now, and their fair value, according to Morningstar, is $70 per share. For that reason, is overvalued about 27%. According to Simply Wall Street, is almost 8% overvalued. According to TipRank, okay, is a strong buy and it has about 11% upside. They expect the price to be $108 per share. Average price for Seeking Alpha is $98 right now. That gives you about 1% from where it is right now, currently about 97%, and then it is a buy from them. So based on this, is a very mixed. Okay, so you got two companies who's looking at it currently, basically by the end of the year, 12 months basically price. These guys are looking at intrinsic value and saying it's very much overvalued right now. So for that reason, and based on the basically historic PE and where the company used to be in the last 5 years of 30 and right now 46, I would say I wouldn't touch this company. And just simply for that, because it seems very expensive and the growth is not there. If the growth for the next 5 years or so, the analysts were expecting at least double digits, then you wouldn't mind paying higher multiples. But right now, we just 3% for the next 5 years is not worth it. Definitely not worth it. And you have to be careful with this type of companies, especially with healthcare. Of course, they're very innovative. Things might come up, but there are other companies. If they don't have a patent, if they not have basically holding that patent, then that means other companies can enter that market. Just like Eli Lilly. Eli Lilly is actually another one that is so overvalued. I think it is probably more expensive than this one. But at some point I do remember trading about 200 something. Right now is that double that. So anyway, moving on in terms of the business activity, Sharia compliance side of things. There's no issues. Interest bearing debt, no issues there. Interest bearing securities is also the same. It looks like they have been buying back their own shares. I will say, is a great company to own. They're buying back their own shares. Okay, they have excellent dividend. They have increased that dividend quite a lot. Their basically profitability side of the things are absolutely perfect, and they do have some free cash flow. But right now, the valuation is too expensive. Okay, and that's my take on this company. I wouldn't, of course. Again, if you are interested in the company and you want to add it to your watch list, and then of course you do your little bit of research, find out exactly what they sell, what type of products they sell, who they sell it to, and the countries that they're in, and so on. Find out a bit more information about the company. Once you have the full picture, I will then say maybe start, once it comes back to your valuation or the price target that you set for yourself, then maybe start adding to your portfolio. As you can see here for the 52 weeks, basically it's gone up quite high up and then came back down a little bit, but it needs to come down quite a bit in order for me to even consider to basically looking at this. There are quite a few analysts looking at this. So Seeking Alpha analysts, basically this one says is a buy, this one is strong buy, a buy again, a hold again, and so there are quite a few people saying this one actually says it's a sell. Both company, Eli Lilly and Novo, a lot to do with the weight loss. That's why they've been in the news for quite some time in the last few weeks. So before then, it was more to do with the diabetes product, but right now, once they found out they can use that product to, of course, lose weight and so on, people started actually taking interest in the company, and that's why the stock gone up so much. Now, just before I close things up with this, that's it for that company. There is news going around regarding the fractional shares. I had message from Interactive Brokers to say from yesterday, basically I received that message and said from today onwards, basically I will not be able to buy fractional shares basically through my ISA account. So I had to tidy things up today. For the family account, there were only 2 companies, alhamdulillah, that were fractional shares. So I kind of sold out those fractional shares and left to basically round things up. I'm moving forward, just to be transparent with you guys. I'm looking at my portfolio and taking off basically those little, can you see there, 0.21 whatever. I might just tidy things up, start selling some of them, just to, in case they come out and then tell us, of course, the same news. By the way, Interactive Brokers, when we put transaction through trading 212, it goes through basically Interactive Brokers. I know that for sure. So if they linked somehow, or maybe because of the transaction, whatever the case might be, they might sooner or later come out and say, you know what, we have now been told we're going to have to basically not allow you to buy fractional shares. So what I'm going to do is I'm going to tidy things up. So all the zeros here, I'm going to basically start selling them, or basically round it up to the next basically whole share, inshallah. So that's the plan moving forward. I think I've done that with Microsoft yesterday because there was a tiny bit of a whatever, so I took that off yesterday. And then things like this one here, I might round it up to basically 14 shares, and then from now on try to buy a whole share, which is pain in the backside, I'll be honest with you guys, because buying fractional shares has been really good. If I want to buy one whole share of this company, I have to pay about $600, or if I want to buy this one, I have to pay almost $800 or whatever, over $800. It's just ridiculous what they're doing, and it's not fair. Absolutely not fair to basically people like ourselves. But you know what, we'll do what we can, inshallah, just to be on the safe side. So like I said, I'll let you know more information about this, but inshallah I'm gonna sell whenever there is, or round it up, inshallah, just to tidy things up before, because that one kind of caught me by surprise, because they said it from today onwards, no more fractional shares. I was like, okay, fine, so what do I do in this situation? So I had to sell those. Okay, but I don't want to trade into one to come out and do exactly the same, and then I'm stuck. So I'm just gonna take out all the fractional shares and buy whole shares from now on. Anyway, I'm gonna stop the video here. Have a wonderful day. Assalamu Alaikum.